All right, and trading has begun. What do we have here? April 8th, Wednesday. ES up 2.7%. Somebody throw in a wellness check for two tick Nick. Mr. Lower highs and lower lows. Probably just wiped out. Will he ever admit it? Hell no. He doesn't admit stuff that everyone knows, like it's a fact. Hasn't made a plug nickel in 6 years minimum. Won't admit it. Think he's going to admit this? Hell no. At any rate, our short-term algo. Yeah, it's not going to like this type of day. This is going to need several hours, a couple days to settle in, really, to where I'd like to see this short-term algo running in. But it is what it is. We will trade whatever comes our way, as we do in our Patreon algo service, which, by the way, doesn't like this type of taco nonsense either. This type of extreme volatility is not conducive to good markets and good trading at all. And since the clown show that is in charge of market volatility is not going anywhere anytime too soon, yeah, I don't expect it to change. So we just do what we do. Put the trades in, put the stops in. Do you hear that too, Tick Nick? And you should be all right. Nick's never going to listen. Most people never listen. And it also doesn't help. Most of you are trading stocks, which you couldn't, or which weren't tradable through a lot of this after market hours. So you're waking up this morning having to take massive losses if you were on the wrong side of this thing with no chance of stopping out in between. One of the very good benefits of futures trading.
Enter short. Stop short. I'm covered in loser dust. Enter short. Stop short. I'm covered in loser dust. Enter short. Stop short. I'm covered in loser dust. Stop short. I'm covered in loser dust. Trading has ended. Enter short. Stop short. Winner, chicken dinner.
Okay, so I'm going to post this, obviously, because you have been watching it. All right, so today will go down as a losing day, about minus 475. And what you'll see here is basically 4 trades. Now, you'll see the first trade as a loser, second trade as a loser. What it looks like trade 3 and 4, which were both losers, historically are going to end up being combined into one trade. Now, you can see that live, but there again, that's the difference between live and historical data. So you have to make sure your live is matching what you've tested, right? So I can tell that in a live process virtually right away. So I can re-enter a trade. You know, it may be a further loss, but I can match my historical, and that's what I'm looking for. And there again, it's executing like you know you should versus any type of any other reason, which is just a wrong reason to do it. And so that trade 3 and 4, which will be combined into trade 3, will be a net loser. And that final trade, which it sounded like it came after the bell, no, that's valid. It's the last, literally the last tick. And the audio just comes out that trading ended before that last tick is allowed to trigger. And if it is in a trade position, which it was today, it just takes the trade and then it finishes that trade out, and that's that. So if you were wondering what was going on, punching after the bell, no, this one was allowed in this case. So what you saw here is 3 losers and 1 winner, and we still came out with a respectable loss, given you lost 3 and won 1. Now that day minus 1,000 or today's minus 1,000 and the low minus 1,200 is about as bad as it would typically get in a given day on average statistically. Now you can have multiple days like that in a row, absolutely no doubt about it. And this is what discipline is. It's trading through that. It's trading regardless of what you want to do. And one more thing in closing here I want to mention is you can tell, the trades were all short as it turned out. All the trades were short today, and we got the trade at, it wasn't the highest of that point forward, but it was pretty high. Now you might argue, well, your stops are too tight. Well, in this case, the stops were too tight. And if you didn't know any better, which you don't looking in because you don't know the entire algorithm and you haven't done the work, you haven't seen the work, so you wouldn't know. But I'm here to tell you, generally speaking, you want to have tighter stops versus wide open ones, despite the fact that today, if I let the stops go a little wider, it would have been a winning day. As a matter of fact, you'll never know how close this was to becoming a winning day, despite the fact that we had 3 losers and 1 winner. Very freaking close. You can't tell from here. But I want to dissuade you from looking at a chart like this and thinking, well, I just have to have my stops wider. No, statistically, you want stops that are pretty tight. Now, too tight is a problem, but you'll know that because when you run your statistics, your Kelly bet, your Secure F, it'll be a negative expectancy. It'll tell you not to trade it. And so that's how you know that something is wrong, and you have to determine what's wrong. This trade itself is good. The stops make it better. And I can show this statistically on pretty much any model I've ever built. The wider the stops, the worse it's going to be for you, believe it or not, despite the fact that in cases like today, it would have worked. That's meaningless. That's meaningless. And this is why you program hop and algo hop, and you can't stick to something that you've seen work if you've been fortunate enough to see something that's been completely vetted like my systems are, and they work. If you're that fortunate, there'll still be a large portion of the people that try it that bomb out because they can't stand losing for even a single day. It's just extreme short-sightedness. It's what people do. But once you're able to rise above that and look through it, you will reach something close to the nirvana of trading as you're ever going to get, and it's still not pretty. I will lose more trades than I win, guaranteed, on this particular algo. Not necessarily my long-term algo, but even that isn't stellar. But the returns, you'll notice, if you don't know any of the other stats, the returns are frigging stellar, and that's the point. You don't get stellar returns magically or accidentally. You get them from a well-disciplined system and you being disciplined to trade the system. So I want to show losing days like this. This is about as bad as it gets, and no one should be losing their friggin' minds over this. And I also want to dissuade people if they think they've got something and they've vetted it out. I want to dissuade you from going, oh, this sucks, this doesn't work, because you get days like this, days that I'm showing you. And I guess thirdly, but certainly not last in importance, is real traders, bona fide winners in the market, are more than willing to show you stuff like this. These bullshit YouTube trading gurus, and you know the ones I'm talking about, the 2-tick knickers and the lying bullshit con men like Cape Coral Mike Norman. Yeah, they never show you stuff like this. And imagine that. Guess what else they can't show you? A portfolio. You don't have to guess anymore why that is. And we'll talk to you soon.